In June, the United States is about to default on its debt again. Again? Yes, while they are telling us to save money and not anyhow spend money, meanwhile, they are just increasing their debt like it's some high score thing or something. And this is bad because the last time this happened was back in 2011 when the US came close to being unable to pay back their debt. That triggered a credit rating downgrade and the stock market to crash by 17%. And now, this is going to happen all over again. So, in this video, I'll be explaining what this whole debt crisis is about, who exactly does the US owe money to, and more importantly, what will happen to the stock market during this period. Also, I've just set up a Telegram group very recently, so you can join the chat or ask any questions that you may have. But with that being said, let's jump right in. Okay, the whole reason we are in this huge mess is because of something called the debt ceiling. The debt ceiling is just the limit which is set by US themselves, saying that they can't borrow more than a certain amount of money. Currently, the debt is at $31.4 trillion, and we are now getting real close to hitting it. But hold up, how did we even get this debt ceiling in the first place? And why can't the US just pay down their debt to solve the problem? To answer this, we have to go all the way back to the early 1900s, when the debt ceiling didn't exist yet. Back then, whenever the Treasury needed to borrow more money, the Congress had to vote to approve it. Over time, they realized this was super mafan. So, in 1917, the Congress created the debt ceiling through something called the Second Liberty Bond Act. With this, they hoped that it would make the government be more fiscally responsible in their spending. Well, we all know what happened after that. With this new debt ceiling, the Treasury no longer has to get approval from the Congress whenever they want to take on more debt. But here comes the problem. In 2022, the government collected $4.9 trillion in revenue, while at the same time spent $6.3 trillion in expenses. Or in other words, they were spending $1.4 trillion more than they were earning. Then they just borrow money to make up for the difference. And this wasn't the first time this has happened. In fact, most of the time, the US government has been spending more money than they were able to earn. That's how you get this super nice looking chart that's going to the moon. And no, that's not the Bitcoin chart. That's the total debt that the US government has racked up over all the years. Fun fact, because the US government owes so much debt, last year, 7.5% of the budget was used to pay the interest alone. Ho-se-bo. But here's an interesting question. If they are constantly running into this debt problem, why won't the government be more responsible with their money? You know, like cut their spending or just use some of the money to pay off their debt? Okay, the government did actually try to reduce their debt. You can see that the US public debt to percent of GDP did go down in 1995, only to shoot back up. They then tried to reduce it again over the past few years. However, spending more than they are earning is not an accident. The government actually wants to do it. Good news, Weibo has decided to extend their super generous promotion by another month. By just funding any amount into Weibo and maintaining the funds in the account for 30 days, you will get 5 free shares worth up to $500. But wait, that's not all. This time, you will also get a chance to win a Tesla Model 3. So, it's getting super exciting, yeah? Besides the awesome sign-up gifts, Weibo also has some super attractive features, like the Money Boo, which lets you earn up to 4+% interest on your idle funds, in-depth analysis tools, free market data, and a global community. So, if you still have not signed up to Weibo yet, chop quickly sign up for it using my link down below, because this super generous deal will not last long. With that being said, let's get back to the video. They are doing stuff like cutting taxes, buying more equipment, and building more infrastructures, all of which will in turn boost the economy, or a better term known as expansionary fiscal policy. And they don't really have to pay down their debt, because it's not about how much debt they have, it's about how they are spending with the debt. For example, when normal people take on more debt, they are using it to buy random stuff like jacket, makeup, hydrating spray, and all the chapalang stuff. But for the government, they are using the debt to grow the economy, which is a good thing. Then here's the next question. Where does the debt come from? And who owns the US government debt? And that is China. Just kidding. The debt just consists of stuff that you and I already know. Stuff like treasury bonds, bills, notes, and floating rate notes. As to who owns the debt, actually almost 2/3 of the debt is held by the US themselves, in places like the Fed, mutual funds, state and local governments, and so on. While the remaining 1/3 of the debt is owned by foreign countries, with the most being held by Japan, then only China, then UK, and yes, even Singapore. But back to the debt ceiling thing. Throughout history, the debt ceiling has been raised whenever the US was about to hit it. So then, if this debt ceiling is causing so much problem, why don't we just, do the obvious and just remove the debt ceiling altogether?
¿Por qué no los dos?
The short answer is, politics is complicated. While removing the debt ceiling may be the best solution, in reality, both the Democrats and the Republicans are using the debt ceiling as a bargaining chip to get what they want. So right now, what's happening is that the Republicans just passed a bill that proposes the government to cut their spending. Only then they will agree to raise the debt ceiling. Then Biden be like, cut what cut? Cut your head lah. If I cut spending, this will only hurt American families. They then met up last week to try to negotiate a deal. But both sides were unable to come to an agreement. Biden be like, cannot means cannot. They then tried to meet again on Friday, but that was later postponed to the following week. And unfortunately, time is running out as there's only a limited number of days where everyone is free to meet up and negotiate a deal. But what exactly will happen if the US did default on their debts? This has never happened before, so no one knows for sure. But I guess there's only one way to find out. Just kidding, let's not find out. But analysts predict that if that were to happen, stock prices would fall by almost a fifth. The economy could contract by 6% and 8 million jobs would be lost. So that's scary, yeah. While the US has never defaulted before, they did come super close to a default in 2011, only to narrowly avoid it by 72 hours. But despite that, the damage was already done, as all this hoo-ha caused the ratings agency S&P to downgrade US credit rating for the first time in history, which in turn made it more expensive for the government to borrow money. Because when investors feel that the government has a higher risk of defaulting, they will demand a higher interest on their bonds. It was estimated that the cost of borrowing went up by $1.3 billion the following year and continued to be more expensive years later. The second thing that will happen is that there will be volatility in the market. Back in 2011, the market was rather calm during the months leading up to the deadline. But 2 weeks prior to the deadline, the market suddenly be like crash and started dropping. And even though the debt ceiling was later raised, the market kept falling, eventually crashing by almost 17% during that period. Will that happen again this time? I don't know. But other than 2011, the US also came close to defaulting in 2013. Though, that time, nothing much happened. The market just dropped by a tiny 4% and immediately went up by 12% after that. The market be like, they're sold, pump it. So, no one really knows what will happen to the market this time. Maybe it will go up, maybe it will go down, but one thing is for sure, it will go right. All jokes aside, here are my thoughts. While it seems like both parties don't want to solve this debt ceiling issue, I'm quite sure neither of them wants to see a default, because it will look bad on their resume. Imagine if you are the guy who caused the US to default, crashed the market by 20% and made 8 million people lose their jobs. That won't look too good, right? For now, both sides are just trying to hold on and see who will blink first. Then, right at the last minute, miraculously come to an agreement and pretend that they have just saved the world from collapsing. Basically, what I'm trying to say is, don't scared lah. This is just another normal day in the world. As long as you keep calm, invest consistently, and over the long term, you will do well. Anyway, that's all for this video. Hopefully, you find it useful. Like, share, and subscribe as I'll be posting new videos every Monday, Wednesday, and Friday.